From an army job of 45,000 rupees to claims of crores, the trading story of Dinesh Kirola. In the year 2020, a young soldier deployed near the LOC was cooking food for his companions. He had no idea that a video appearing on his mobile was about to change his entire life. In the video, a person was talking about earning lakhs from the share market. Outside there was the tension of the border, but on that small screen, the world of making quick money appeared extremely easy. The soldier, who received a monthly salary of 45,000 rupees, opened a Demat account. In the beginning there was a little profit, confidence increased, and then came a phase in which salary, savings and borrowed money began to sink. It is said that the losses kept growing and reached approximately 40 lakh rupees. The debt installments became bigger than the salary, and relationships with the friends who had trusted him also began to deteriorate. Then the story took a shocking turn. The same youth, after some time, started claiming earnings of 1.5 crore rupees. But is this a success story or a warning about trading risk? That youth's name is Dinesh Kirola, who is known on social media by the name Stock Burner. Most of the figures of his journey are based on his interviews and media profiles. It is important to understand at the outset that audited broker statements related to his loss of 40 lakh rupees and earning of 1.5 crore rupees are not available in the public domain. Therefore, it is appropriate to consider them self-reported claims. According to media reports, Dinesh comes from an ordinary family in Uttarakhand. His father used to run a vegetable shop, and 3 younger sisters and 1 younger brother have been mentioned in the family. In childhood, his inclination was more towards sports than charts. Reports describe him as a national-level cross-country runner, and this athletic background opened the way for him to enter the army. According to profiles based on his interviews, he joined the Indian Army through the sports quota in 2018 at around 18 years of age and completed his military training in 2019. Despite having the opportunity to choose a sports team after training, he preferred to go to a field unit. Later, his posting happened near the LOC in the Balakot sector of Jammu and Kashmir. According to Dinesh, due to a medical problem in 2020, he was not allowed to carry a weapon for some time. During this period, he got the job of preparing food for fellow soldiers. One day after the work was completed, he was using his mobile. Just then, a video showing big earnings from the share market appeared on YouTube, and his curiosity towards trading began. He opened a Demat account and started making small trades from his army salary. At that time, his monthly pay has been stated to be around 45,000 rupees, which became the source of his initial capital. In the first few days, the profit was as small as just 20 rupees or 30 rupees. The amount was nominal, but seeing a green number on the screen for the first time started giving him the confidence that the method is easy. After this, on a friend's advice, he put around 80,000 rupees to 90,000 rupees into an IPO. According to a media profile, he made an initial profit of approximately 18,000 rupees from that investment. This is where a psychological trap started. Profit received suddenly can feel like proof of skill, whereas the role of luck is also very big in IPO allotment, listing demand and market mood. With increased confidence, Dinesh made the capital around 1 lakh rupees and moved towards active trading. Now the objective was not to build wealth from investment, but to catch price movement and pull out quick profit. In a short-selling trade, he suffered his first big loss of around 20,000 rupees. An ordinary trader might have stopped here, but a restlessness to get that amount back immediately arose in his mind. In the attempt to recover the loss, the position and frequency kept increasing. According to reports, the loss of 20,000 rupees reached first 45,000 rupees and then approximately 1 lakh rupees. This is called revenge trading. Instead of making decisions by looking at the market situation, the trader starts fighting their old loss, and every new trade connects them with emotion, not calculation. Around the year 2021, Dinesh moved from equity cash towards options trading. In options, a big position can be formed with a low premium, but a wrong move can wipe out the entire amount quickly. According to his account, 1 lakh rupees became 1.20 lakh rupees in some time. This small profit increased the risk appetite, but soon the entire capital including the profit was wiped out. After this, trading did not remain limited only to savings. Reports say that with a friend's help, he took a personal loan of approximately 8 lakh rupees, whose monthly EMI was around 18,000 rupees. It has been said that a profit of around 200,000 rupees was initially made from the loan money. But between leverage and recovery pressure, that profit also went, and a large part of the borrowed capital was lost. Then a claim of adding around 3 lakh rupees from salary and taking a second loan of around 7 lakh rupees comes forward. This amount of around 10 lakh rupees went into the market in a few weeks. Up to this point, the cumulative loss was stated to be approximately 20 lakh rupees. Half the salary began going into bank installments, yet the hope of getting the loss back could not keep him completely away from the market. He also raised money from some companions in the army. In some reports, there is mention of borrowing approximately 8 lakh rupees and promising to give profit in return, which turned personal risk into social risk. When the trade went bad, not only did the account balance break, pressure from friends, loan repayment, and the responsibility of duty began coming together, which could weaken decision-making even further. In a detailed media account, there is also mention of taking a loan of 10 lakh rupees in a friend's name further ahead. Dinesh admitted in interviews that he had given wrong reasons for the borrowing. By the end of this very phase, the total loss was stated to be around 35 to 40 lakh rupees. The figure changes slightly in different interviews, so the exact amount cannot be considered an independently verified total. For some time, he distanced himself from trading. This pause of about 2 to 3 months is an important part of his story, because for the first time, the focus shifted from recovery to understanding his own mistakes. He has spoken about spending time on charts, price behavior, position sizing, and loss control. Not just strategy, it was necessary to understand that no setup lasts for a long time with unlimited risk. Reports differ on how much money he had at the time of his return. In some places around 2 lakh rupees, while in a detailed profile, a remaining capital of approximately 3.5 lakh rupees has been stated. This time, his claim was that he adopted the rule of booking small losses quickly and giving more time to profitable trades. The idea was useful, but execution was still happening in high-risk options. An idea of his volatility can be gathered from the claim that on one day there was a profit of approximately 22 lakh rupees, while on another day there was also a loss of around 18 lakh rupees. This was not a pattern like a stable income. After a few profitable months, he spoke of earning around 20 lakh rupees. From this very amount, the beginning of returning friends' money and reducing old financial pressure is stated. According to a media profile, he sent around 8 lakh rupees home for his sister's wedding and kept around 12 lakh rupees further as trading capital. This information is also based on his narrative. In April 2022, Dinesh decided to leave his army job and choose full-time trading. According to him, the impact of market activity had started falling on his service, and running both paths together was difficult. After leaving the job, he started trading while living in a low-rent PG. The fixed salary had ended, so now the pressure of every month's expenses and loan repayment got connected to market performance. After this, a claim of taking the capital to 1.5 crore rupees in a few months came forward. Many articles describe this as income, some as profit, and some as portfolio, whereas these three financial terms are not the same. Income can be earnings over the entire period, profit is the amount left after expenses and losses, while a portfolio shows the market value of assets at a given time. Mixing them can make the story misleading. Complete contract notes, tax returns, or independently audited P&L have not been given in publicly available reports. Therefore, it would not be factually safe to describe 1.5 crore rupees as a certified current net worth. This caution is not an allegation against Dinesh. To verify the extraordinary earning of any social media trader, not selected screenshots, but long-period broker statements, charges, and tax-adjusted records are necessary. His journey does not prove that every move of the market can be understood. Conditions change. Therefore, before an entry strategy, a survival strategy, limited risk and such capital is needed, whose loss does not break life. Dinesh's most dangerous mistake was not the loss, but the attempt to recover the loss with borrowed money. The interest on a personal loan is fixed, whereas a trading return is never fixed. In options, this danger increases. The premium can quickly move towards zero, charges get added in frequent trades, and leverage turns a small price movement into a big financial shock. According to a July 2025 study by SEBI, approximately 91% of individual traders trading equity derivatives incurred a net loss. This means a profitable trader is an exception, not the normal outcome. In that same study, the combined net loss of individual traders after transaction costs was stated to be 1,05,603 crore. This was approximately 41% higher than the previous financial year. Therefore, leaving a job after looking at one comeback story is just like stopping regular income after seeing a lottery winner. The visible winner is not the average of the entire population. Dinesh's public identity did not remain limited only to a trader. He started making YouTube content under the name Stock Burner, where videos related to intraday trading, bank Nifty, and options are available. With time, this name turned into an education business. Their official website promotes services like courses, workshops, a mobile app, an online community, and an offline Stock Burner academy. In July 2026, the website shows promotional figures of more than 900,000 subscribers, 1 million followers, 190,000 downloads, and 230,000 members, though these are platform claims. The most important updated information is clearly written on that very website. Stock Burner is not registered with SEBI. The website also tells users to consult a financial advisor before an investment decision. This means that educational content should not be understood as personalized investment advice or a guaranteed recommendation. A person's strategy cannot be copied without their capital, psychology, and risk capacity. SEBI also advises investors to verify registration, remain careful of quick return promises, and not to make transactions relying solely on the stock tips of unregistered entities. Today, along with trading, content, courses, workshops, and an app are also included in the Stock Burner ecosystem. Therefore, it is not appropriate to consider a creator's total lifestyle or business growth as the result of market profit alone. An expensive setup, car, or big profit screenshot is easily visible on social media. If the background losses, taxes, brokerage, course revenue, and other businesses are not visible, the picture remains incomplete. The inspiring side of Dinesh's story is that he publicly accepted his initial losses, took a pause, and then emphasized the need for discipline and risk control. But the warning side is more important: revenge trading, loans, friends' money, and the impact on job performance. And ending with a profit does not prove these dangerous decisions right. Before becoming a full-time trader, at least an emergency fund, debt-free risk capital, a verified long-term track record, and experience of several market cycles are needed. Just a few profitable months are not a sufficient basis. Trading has to be looked at like a business, not as a shortcut to a job. This includes daily records, a maximum loss limit, taxes, transaction costs, health pressure, and planning for bad months of income. Therefore, the right title of Dinesh Kirola's journey is not The Formula to Become a Crorepati from 45,000 rupees. This is a complicated story formed amidst ambition, heavy mistakes, unverified claims, and extraordinary risk. As of July 2026, he appears as an active trader, creator, and educator in the form of Stock Burner. But an independently verified public figure of his current net worth or total earnings made from trading alone is not available. In the end, the market is not influenced by anyone's past victory. Real success is not just a big profit screenshot, but saving capital, staying away from debt, and not making a mistake that turns life itself into a trade.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.